Thank you everybody for investing your time in us today. These are the half-year results for 2023 for the Pebble Group. My name is Chris Lee. I'm the Chief Exec of Pebble Group and joined by, I think it's about 550 people in our business of great quality. And one of them's with me today, Claire Thomson, our CFO. We've been part of the business for, well, like myself, 23 years, Claire about 16. So really invest in that business emotionally, absolutely, but also financially. And the management team, we have around about 9% of the share capital of the group. In terms of how we're going to do things today, just going to give you a little introduction into the industry that we're part of, and then some highlights on the half-year results. And then Claire will take you through some numbers, and then we'll go into each of the businesses, our businesses, Brand Addition and Facilis in turn. And we aim to be done in around about 20 minutes and take some questions at the end. So we're Pebble Group, but two businesses called Brand Addition and Facilis are our sort of operations within that organisation within the group. In terms of the industry we're part of, we're really part of the promotional product sector, and promotional products are all around us. It's a much bigger industry than people would actually realise at first, and so it's all businesses, all sizes, all sectors, and all geographies. They're using promotional products to promote their brand. And so you'll have some in your office, at home, in your car, where you've received a gift and a product from a company, which really is kind of trying to make an attachment between you, the stakeholder, and the business itself. And on an overall basis, we think the industry is worth about 50 billion. So again, much higher than most people would think. In terms of how we fit into that industry, so if you start at the top there, the global industry around about 50 billion. The stats tell us that sort of half of that is in North America, and we'll come on to why that's important in a moment. And the way Pebble Group fits into that is we've got visibility of about $1.5 billion worth of that industry. And that's to our two operations, Facilisgroup and Brand Addition. Facilisgroup, about 1.4 billion goes through our technology. So we're not making the sales there, but actually we're helping those sales move efficiently from the supplier to the distributor into the end user. So our technology is helping that process. We have visibility about 1.4 billion of that market. And in the USA, that's around 6% market share. In terms of our products business, Brand Addition sells products to some of the best companies in the world, some of the best known brands in the world, and really looking to produce quality products, engages their stakeholders, and delivered on a global basis, with a real provenance to the product of where it comes from, whose hands is it made in, and kind of what factory was it made at. And that business has around about an 8% market share of those really large corporates, is what we estimate. So that's how we fit into the industry. In terms of the highlights for the half year, in terms of profit growth, around about 12% at EBITDA level. Net cash, we kind of generated about 4 million more than we had on the balance sheet this time last year. And Claire will talk about how the working capital cycle works. And that's after the first dividend that we made this year as well. So really, it's around about 5 million like-for-like difference in terms of where we are with cash versus last year. And how do those numbers come together? That's through Facilis and Brand Addition. They're doing all the hard work. On a sterling basis, revenue growth in Facilis was 24%. On a dollar basis, that goes around about 18%. So we had a little bit of a tailwind there. And that GMV is really growing through the gross merchandise value, that is, which is what are our customers pushing through our system in terms of sales. We talked about that 1.4 billion on a global basis, generally second half weighted. I think that might be about 1.5 billion by the end of 2023. And Brand Addition, less growth, but I still think a really super performance from that business in a really difficult economy when some of the large corporate budgets have been tested. And Brand Addition growing, I think, is super performance. And to put on top of that, growing that gross margin, again, in a very difficult circumstances by 3 points, I think is a super performance from that business. So they're the highlights. Claire will take you through some of the numbers.
Thank you. So kind of continuing the theme of the highlights, these are the group KPIs and, all moving in the right direction. So that incremental revenue translating through to EBITDA and that EBITDA margin moving forward as we're starting to see the impact of the high margin SaaS business, Facilis, on our overall group profile. And that kind of goes all the way down the P&L. So our EPS is moving forward at the half year. And as Chris has already touched on, cash is 4 million ahead of where we were this time last year and 5 million on a like-for-like basis when we take into account the dividend. This slide is just kind of giving you a bit of context on the kind of financial dynamics of the group. And in particular, we've got that products business in Brand Addition and the tech platform in Facilis, and they are quite different in terms of their impact on revenue and EBITDA. So left-hand side is revenue, and you can see there those product sales in Brand Addition are the lion's share of that. Facilis, tech platform, much smaller proportion, fast growing, but smaller proportion of the sales. And that translates through to EBITDA. Then when we are earning on those Facilis revenues, a 50% EBITDA margin. And we're now seeing, as Facilis continues to grow, Facilis is, getting towards being 50% of our group. And we've signaled that we expect that to continue, and we'll push past that number as we move through 2024. A little bit more detail now. So P&L, we touched on, everything's moving in the right direction. The revenue growth of 5% for the group, that splits into kind of the 24% with Facilisgroup, and then that growth at Brand Addition, which, as I think we've already said, was smaller, but a great performance in what has been a tough macro. Can see our margin, our gross profit margin moving forward. So we were at 38.5 this time last year. We're now just under 43. As a combination of two things. So again, it's the impact of the growth in Facilis on the overall group financial dynamics, but also that super performance at Brand Addition, where the gross margin has moved forward by 3 points. I've said it already, but just to reiterate, that's translating through to adjusted EBITDA. We've been investing heavily in our tech platforms at Facilis, and that's starting to come through as we signaled it would at the year end in our D&A charge. But again, all moving forward in the right direction, and then the operating profit is ahead of where we were this time last year. Cash flow remains really kind of straightforward, and that strong profit to cash conversion metric continues. To recap for those that are new to the story, or that those who've kind of forgotten, the working capital in the group is all relates to Brand Addition, and that movement in the working capital cycle is in line with our usual our usual experience, where we are high in working capital at half year, and that will unwind as we move to the year end. And again, this week we've signaled that we're expecting to land a cash number that's out there in the market for the year end, and it's kind of consistent profile with where we were last year. I've talked about investment in CapEx. You can see that that's moved forward this first half, and have continued to invest in those platforms at Facilis. Then again, we've talked about the dividend. You can see that payment going through there. Other than that, it's all fairly straightforward. Balance sheet, again, nice and simple. The current assets, the piece in there that's of interest is the investment in our platform at Facilis, and that's kind of, we have invested in that over the last 18 months significantly. We've brought new products to market, and that's been amortized over 3 years. The rest of the working capital and the balance sheet really sits with Brand Addition. So that's the blue chip customers that we'll come on to talk about. So it's high quality assets underwritten by our customers in terms of any stock that we're holding for them, and our receivables and payables are just moving in line with the sales volumes. All metrics remain as consistent with prior years. So again, we introduced this slide at the year end, and just to kind of re-emphasize our use of capital. So, number one, we had 50 million on the balance sheet at the end of December 22, and it will be around about 17 million when we get to this year. And we think that's a sensible place for us in terms of cash. Touched on Brand Addition and its use of working capital. So there's no working capital in Facilisgroup. Brand Addition does require working capital as it grows, so there will always be a little bit of investment there, but that's proportionate to the sales volumes. Capital expenditure, we have been investing in Facilisgroup to increase our product offering, round off our product offering, and increase our addressable market. We're at the peak of that investment in 23, and so that will be coming down as we move through 24, which is something that we've signaled. And the investment in Brand Addition is at generally a consistent level every year. We did introduce our maiden dividend in 22 and signaled that we want that to be a progressive policy, and that's what we intend to do in terms of our kind of immediate uses of cash.
Thank you, Emma.
Go now.
So taking that, I'll run through Facilis. Claire will do Brand Addition, then we'll finish with some ESG and head into questions. So a little bit about the model. So the way the promotional products businesses work, you have suppliers who are specialists in product categories. The end user, the brand, wants kind of all products, and so that creates that need for the distributor in the middle to sort of bring all together. Facilis, what we're trying to do is bring technology to that market to help efficiencies for the supplier and the distributor and into the customer. And that's kind of what the premise of the business is based upon. On a historic basis, as we look back, what's been going through the business is that 1.4 million of our customer sales, what we call the GMV, the gross merchandise value, that's through 238 partners now, around about 1 million orders, and we have some preferred suppliers that we try and help the supplier, the good suppliers, and our customers come together to make great efficiencies and support each other in kind of growing their own businesses. So technology above that market is what Facilis does. Looking back, and these are all historic, so the revenues and the EBITDA, the growth on the top, is really created by the KPIs below. So really all moving in the right direction. And you know, this is probably one of the few businesses in this industry that wasn't affected by COVID. You can see some nice lines all moving in the right direction. It's all in US dollars, which is the home currency of our business. So partner growth has been fairly consistent, which will drive GMV, and therefore those lines going up. And you can see there that GMV is generally bigger in the second half than it is in the first. And again, if we kind of help our customers work with a great group of suppliers and the preferred suppliers that we use, and they can kind of grow each other's businesses and get great pricing, great products and service, that kind of preferred supplier spend helps our business as well in terms of growing. So looking back, sort of those KPIs at the bottom have really driven the numbers at the top. As far as looking to the future, we have invested, you know, very clearly and spent, thoughtfully, some investment in the capex. And so now, as we look forward, on the left-hand side are the products that we're going to have in market. So the top product called Syncore, that's what everything has been based to date. Our performance and our financials have been based to date. That's an order workflow system that's helping our customers efficiently manage with their suppliers and their teams and to help them professionalize and grow. We're bringing a couple of new products into market, commercial stores and orders, which does a couple of things. It helps us sell more to existing customers from the store side, but also the order side is taking us to the long fragmented tail in the promotional products industry in North America. And so they're quite different products within the same industry. And rather than kind of talk about Facilisgroup, then this product, this product, this product, on the right-hand side, what we're kind of bundling all that together and saying, we're here to provide technology and services to the promotional products industry. We drive a GMV forward by using those products, and we're going to kind of try and grow the attach rates that we collect from that GMV, and that becomes our income. So that sort of right-hand slide, this kind of half year is really a handover to say that's the main KPI that we're using on the right-hand side here. How we're driving GMV forward, the attach rate that we're able to collect from there, and the multiplication of those two is the income that we receive at the end. And then, so I think that's our elevator pitch, is that right-hand graph. And but what we want to do is to make sure investors who know us pretty well and kind of want to get into the detail, that we will supply information that helps them really kind of get into the detail. But kind of beginning to summarize this as we bring new products into the market the way we've described on the right. In terms of customer numbers, you can see sort of Syncore, that main product, and that's something that we sort of should never take for granted. We can continue to invest into, and that's continues to grow in terms of customer numbers. But our new products now, Commercio was non-paid when we kind of spoke to you last and had around 130 customers, and they've turned into now 55 paying, of which kind of a large proportion are existing Syncore customers, so taking more than one product from us now. And our orders products, which is aimed at the order workflow for the really long tail in the promotional products industry, that's kind of out there and been tested at the moment. We hope to launch that early next year. And on the right-hand side, growth in all these three areas, we hope kind of moves that forward. We invested in the business, and the business was like just about $10 million. We've taken that over to 20, and we really want to kind of demonstrate to an investor community and for our own ambition that we're taking that beyond 30, beyond 40, and we really think we can kind of use the investment we made in this industry and the large fragmented nature of it to kind of push ourselves towards 50 million. If we can do that, it'll be a huge success. In terms of what that's meant in capital expenditure, you can see on the left-hand side of the graph here, our EBITDA has grown. So the sort of 2020 to 2020, sort of 23, there are actual numbers. And we can see that our EBITDA is the sort of the total, and we've split that pretty evenly. Our cash has stayed quite similar because we've been spending and investing in capex on a new product. That new product will continue to be invested in, but now sort of less heavily than when you started those up and launching them. That curve comes down slightly. So as that curve comes down, our cash elements, the cash conversion goes up. And if our plans come together, our EBITDA keeps moving forward, and you create this mouth, which kind of is a growing cash balance. And again, that's sort of a demonstration of the principles we're trying to look for rather than any sort of forecast, but continuing to grow our profitability, and got help with new products to do that. And coming down, but still absolutely invested in our products, but coming down slightly from the peak, that kind of should create, if we do things right, a nice cash balance at the end. And then sort of we put this in our full year results to say what we're trying to do in 2023, and that is continue to develop the Syncore. Partner retention is very, very important, and we must keep an eye on that, and it's very high, but also attracting new partners into there. In terms of kind of putting Commercio out there, it's now paying for products, but we need to keep investing into that and developing products to make sure that becomes a market leader. And then the third thing, we're kind of well on the way to launching orders. So we're at kind of various stages of those three different goals, but all in a sensible place, and very much ambitious to keep going. And Claire will talk you now through branding. We're nearly there.
Yeah. Thank you. So just touch again on, so this is the model of the industry. So the brands on the right-hand side that create the demand, and the suppliers that are generally product specific that, kind of supply the products, surprisingly enough. So Brand Addition sits in the middle. So Brand Addition, we've said, sells product. It's a large distributor, but it's working solely under contract with some of the largest brands in the world. So every one of Brand Addition's customers would be a familiar name to you. So, similar slide to what we showed for Facilis. So the financial dynamics of the prior years and then the first half along the top. And, revenue moved forward by about 3%, which is a really sensible performance in what's been a tough macro for Brand Addition. And then the pie charts at the bottom are showing are telling the story of how that revenue's moved. And what we've seen in Brand Addition is, our technology clients, they've spent a little bit less with us this year, as have some of our consumer-facing clients. But we've seen real strength in what would be a more traditional sectors of transport and engineering. And so that combined, that kind of resilience and that geographic and sector spread has meant that Brand Addition has managed to move its revenue line forward in what's been a difficult environment. We'll kind of re-emphasize, we've said it a couple of times now, but the team there have done a super job in moving the gross profit margins forward. And that's been, in response to our customers at Brand Addition asking for us to supply more services. So, kind of the way in which we work with them is more complex, required investment on our half, and our customers have been willing to pay for that investment, and we've managed to move that gross margin forward as a result of that. And so if the revenue line and the EBITDA line, EBITDA as a percentage of revenue has stayed fairly similar, we have managed to move gross profit forward in response to those demands from our customers. We introduced this graph at the full year, or this chart at the full year. But we can't often get asked about, what happens to Brand Addition in a downturn, or if life gets a little bit tough. And, I love this slide. I think, it shows that this is a great business, that whatever you throw at it, so we've got a pandemic, we've had Brexit, we've had challenges with supply chain, freight, inflation, FX, whatever, if you look over that period since IPO, managed to grow that Brand Addition revenue by 20%. It's moved its margins forward. We've got 100% client retention of its top 10 clients, which is the vast majority of its revenue. And we've been really successful at winning new business. So I think, Brand Addition over time is a, very strong proposition. It's a great business. And this slide shows how it can react to anything that you throw at it. And then again, kind of reiterating our goals for 23, as we did for Facilis. So, holding on to those customers is very, very important. And so kind of making sure that we retain all of our major clients is, a key focus for the team. Winning new, because that means that we can continue to move that revenue line forward. And again, and now kind of focusing on the success that we've had with gross margin and making sure that we retain those improved levels.
That's right. And taking you home on some ESG. ESG really naturally weaves its way into Brand Addition and Facilisgroup. So Brand Addition very much from our customers and sustainability, and looking for kind of more and more sustainable solutions, whether it's products or it's freight. And Facilis, certainly on the community side, and the sort of efforts we make there, engaging our suppliers and our partners in terms of making a positive impact on the community. So we have some people who are dedicating our business to looking after this and do a super job of it. And so we've evolved what we call our 4 cornerstones. We've sort of been a public company now for almost 4 years, and kind of keep learning and keep evolving in terms of what we're doing to make sure we're communicating clearly, we're putting our targets out there, and we kind of, again, articulating how we're doing against those targets. So there's a piece on there in terms of, the 4 cornerstones, how they've evolved, in terms of how we're engaging with our stakeholders. Over the last probably 6 months, we've been out to investors, to suppliers, to our teams, to our customers, and asked them what's most important to them, and pulled our materiality assessment out there. And so it's all small print, but this is on our website and now in terms of pebblegroup.com. And we'll be bringing out our 3rd standalone ESG report alongside our report and accounts early next year. So it's something that we want to ensure we're doing best practice at, but we're not doing it for the sake of doing it to tick a box. We're doing it when it actually does make a difference in our tone of voice, and making it naturally weave into the business rather than trying to force anything in there. And that really takes us to the end, in terms of the outlook that we've put. I think we've got 2 wonderful businesses. I think Facilis has some amazing potential, some people working extremely hard there, to really drive kind of new products into the market and, and push kind of our customer numbers forward. So I have some super people there, and on Facilis side, and a very differentiated business with wonderful opportunities. And on Brand Addition, again, a kind of more mature business, but some, kind of thing is about 400 people, from Asia to the US and everywhere in between in Europe. really working hard to push those businesses forward. And in what's a difficult market, we certainly ask a lot of ourselves and our teams, and we're able to say, in a quite challenging space, that in full year 2023 we do expect expectations to be in line with the market. So I think that's us. Really happy to answer any questions. Hope that was okay for everyone.
We've got a few questions already. These results seem to show good resilience. How have the markets you operate in changed over the last 12 months with the current economic environment?
Yeah, I think it has been a little tougher, so I think on Facilis for our customers. So you see the growth in GMV, so the growth of our, what we see, the sales our customers are making haven't grown at as higher rates. And that kind of gives you a sense of that economy in the US. And, our customers are very entrepreneurial businesses with some great salespeople in there who drive those businesses forward. So that rate of growth slowing their shares, I think, has been a bit tougher in this year than perhaps even last. And then on brand addition, that probably comes out rather than on an overall basis, probably a sector basis. As Claire said, technology and our consumer businesses, our customers remain our customers. So they've spent a little bit less rather than we've lost customers. But we've had some of our, so our engineer and our transport sector and some new business have really smoothed that out. So I think it is, feels a little hard out there, but equally, there's two great businesses with, slightly different opportunities, but differentiate business in a really interesting market. I think we probably hold our own, and I think we're pretty tough on measuring ourselves sometimes, and we call it a solid performance. When we've been out speaking to the market, I think we're probably getting a little more credit than we give ourselves sometimes for what we've done.
And what percentage of revenue is in US dollars, and how does the move in exchange rates affect revenue and profit?
Yeah, so it's probably about 30% of revenue is in US dollars. So I think if we comparing against last year, if comparing against last year, then I think we've had a tailwind in the first half, and that's probably we're going to have a headwind in the second as we move into, if we move into H2. But I think when we're talking about brand addition US and Facilis US, it's just important to remember that it's the bottom of the P&L that we're translating. So it's the translational effect that we'll have on the whole group as opposed to the kind of all the way down.
And can you tell us more about the Facilis customer base, who they are, where they're located, and what gives you confidence for 2024?
So the Facilis, I suppose our addressable market is wider than it ever has been now. So there are something like 20,000 businesses in the North American promotional products market. And I suppose our goal is to say to every one of those businesses, we have some technology that can help you. And that's kind of why we've rounded out the technology stack. If I look back, kind of, what is our flagship product we call Syncor is very much aimed at entrepreneurial growing businesses in that subsector of that. We think there's about 1,600 of those that have revenues of $2 million to about 30 million. And they're often management-owned businesses, extremely entrepreneurial salespeople who would like kind of systems to help give them time to sell. So something that's efficient, gives them good visibility. And so our Syncor products, I suppose our business addressable market is the whole 20,000 there. And then sort of Syncor, our flagship, is a subsection of that. But then the new products coming out give us access to that wider market. So, again, the proposition of Facilis is if you're in the North American promotional products distributor, one of those 20,000, we've got some technology that can help your business become more efficient and grow.
And the orders product is addressing a different and much larger by number customer cohort to Syncor and Commercio. How are you marketing it?
So yeah, it's just slightly different, and so that will be involve being at trade shows, much more online, and much more direct marketing than we've done in the past. So it is a much sort of wider audience and needs to be looked at slightly differently. But it's a market we know extremely well. We all know the trade associations, we all know the trade shows that go there and the websites that have been sort of viewed. And so it is a slightly sort of more mass market marketing exercise than we have in the past. But that's to a market we know extremely well, and it's based in North America.
And can you tell us a bit more about the pipeline for Syncor?
Yeah, and so in terms of the investment we put in, we've got to have steady growth, and that's throughout COVID as well. We saw the partner numbers that we showed on an earlier slide, and that's been nice kind of interesting growth. And don't forget, there is a little bit of attrition in there, so those gross growth numbers are slightly higher. We do want to sort of make sure we're growing that responsibly, both for internally managing that, but also responsibly in terms of the quality of the businesses that will be joining us. And so I think we have we have invested more in the sales team in order to sort of, grow that pipeline. And what we need to do now is see that investment turn into fruition. But I think we're in a stronger place than we have been perhaps in the last couple of years in terms of pipeline. But pipeline's one thing, isn't it? Reality is another. So we need to kind of turn that potential into some results.
And how happy are you with the conversion rate for Commercio from the trial customer set to paying clients?
And I think there's two sides to the same coin. So we went from 130, 150 non-paying customers to 50 who are paying. And I suppose on the external, that sort of 30% conversion, is that good? I suppose you could position that where you want. I'd probably like that to have been higher. Well, I would. So I kind of think, as I judge ourselves internally, I think we'd like that to be a little bit better. If I flip that round and say that 20% of our existing Syncore customers are now taking another product from us, I think that's quite good. So depending which angle you want to take on that, I think you can kind of look at it either way. But the facts are, we had 150 have turned into 55, non-paying turned into 55 paying, and 20% of customers are taking another product from us. So you can kind of, make your own judgments, which side of the coin you want to look at.
And can you explain what's meant by the attach rate? What determines this metric?
Yeah, so it's pretty simple maths, and so we're trying to drive the GMV forward, so the sales that go through our system, and obviously, kind of on that, what we'd like to do is provide quality services and technology that allow us to keep the greatest percentage of that we can, because our customers are receiving great value from us. So the two key metrics we want to do is provide technology and service to push the GMV forward, and then what is the highest percentage rate we can take from that, and need times one by the other, and that adds up our income. So it's really a way of saying we're trying to move GMV forward, we're trying to increase the percentage that we retain of that, and that's in kind of summary, how we're kind of looking to drive revenue.
Great, thank you very much indeed. And that's the end of questions. Do you have any closing remarks?
No, again, sort of always an opportunity for me to publicly say thank you to the teams. So our three brands, Pebble Group, Facilis, and Brand Addition, we have some amazing people working really hard, across those businesses. That's from North America into Europe and Asia, and it's thank you to those guys. They're the sort of people who produce these results, and I think, as I say, we always want a little bit more. But I kind of look back and I look at the external environment and say the guys have done an amazing job, and long may that continue.